Yeah, hello everyone. Welcome to yet another weekly analysis. So, for last week we had pristine predictions, but the markets are the markets. They do what they want to do. We have to adapt. We have to be realistic with the markets. You see what I'm saying to you? So, for this week we have about three pairs, but we will be running a full top down analysis, and I'll be sharing some pointers, some things that would help, to understand, to maneuver some market conditions. You see what I'm saying to you? There's something you need to understand, that the market is not like, it's not uniform. You see what I'm saying? There are some things that happen in the market that need a different approach. You see what I'm saying to you? So some things that happen in the market that need a different approach. Yeah, there are we have the standard approaches to the market: break of connection line, the break of and retest of support and resistance lines. We have this. You see what I'm saying to you? But there are other instances where the market, the price could go to the old demand zones and then push from there. You see what I'm saying to you? So that's what's happening right now, and I'm going to show you how to maneuver these little things that happen once in a while in the market. So starting for this week will be USGJPY. USGJPY, it's a dollar-based pair, and I need you to understand something about correlation. There's something you need to understand: correlation, right? Correlation is this: when you take two pairs and then you can contrast them out, between each other. So, for example, USGJPY and then the Euro USD. These are contrasting pairs. These are pairs that move in the opposite direction, right? Now, correlation happens only on the higher time frame. You see what I'm saying to you? What I mean is this, right? On the monthly time frame on USGJPY, right, we are highly bullish. But on the weekly time frame, on the monthly time frame on Euro USD, we are bearish. Structure wise, the market moves with structure, not with your support and resistance. It moves with structure. You see what I'm saying? So right now, what we have to see is this, right? Higher, 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 low, higher, high. Now the market has come into the demand zone of the higher low, and that is where we're getting this push from. This push from. The same thing to you. So right now, USD is an A plus setup because it is trending in the direction of the monthly, or rather, it is trending in the direction of the overall trend. This is very important to understand. This is very important to note, and we should learn to take advantages of this. These opportunities. The same thing to you. So on Euro USD, then I'll show you what I'm saying, right? On Euro USD, we are extremely bearish. All we are having is a pullback. Now, if we're having a pullback, is it wise to trade the pullback? It is possible to trade the pullback. That's what I'm saying to you. On the higher time, that is why you have to go to the higher time frame. You cannot go trading pullbacks on the 4 hour, the 1 hour, the 15 minutes. No, 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 no. That's what I'm saying. We can trade pullback on the higher time frame, but we need to have a range. We need to have history to tell us that yes, it has happened before. We can work with it. We can use it. The same thing to you. So in this case, we are in a range on the monthly time frame on Euro USD. We are in a range that is, sorry, we've broken back into a range that we've used before, and then we expect the market to move all the way to the upside. Now, the weekly time frame has to be bullish. The daily time frame has to be bullish. We have to trade in that direction. That's what I'm saying to you. But this is a B plus setup because it is a pullback. It is the pullback we are trading. We are trading rather. We are trading the pullback. That's what I'm saying to you. So on Euro US, this until we break here on Euro USD, we are still bearish. That's what I'm saying. So this brings us back to the first pair of USGPY. This is the reason why we're buying. Most people might have have reasons to sell, but this is the reason why we should be buying. This is the reason why we should be looking to go long on the USGJPY. You see what I'm saying? And you need to understand this, right? USGJPY is basically going up. Euro USD is basically going up at the same time. How does that work? Correlation. You see what I'm saying to you? Use the higher time frame. You see what I'm saying? Use the word higher time frame. It is extremely bullish. It is highly bullish. The real direction of USDJPY is bullish. The real direction of Euro USD is bearish. So the fact that Euro USD might be trending to the upside right now and USDJPY is also trending to the upside right now, do not let it confuse you. You have to trade what you see. Don't trade what you think. Don't trade how you feel. What you feel. Trade what the market tells you. Trade what the market is showing you. The markets right now, they are showing us is a particular, a particular trend, a particular thing. One thing, that is what the market is showing us right now. And we cannot. Do not confuse yourself. Do not, try to, interpret it. Do not try to take it for what it is not. Take it for what it is. Be realistic in the market, right? So moving forward on USGPY, I am in a buy. Yes, I am in a buy. And I'll show you how I entered, how I executed my thought process. This is what I'm going to do. On the USDJPY, we are bullish. How are we bullish? Higher high, higher low, higher high. Now we are still bullish because we never broke this structure. We never broke the last low. We never broke it, right? And you can see how precise the market is. It kept rejecting. It kept rejecting. The same saying that is where the push is coming from. Every time we came here, we had a push. Every time we came here, we had a push. We came here, we had a push. We've come again. Simple and short. He should repeat itself with trading. It should have a push, and that is what we are banking on. The same saying to you. Now on the weekly time frame, we need to also look at what the trend is saying. Right now on the weekly time frame, we are still bearish. You need to understand this right now. With structure is the most important thing for me, and I think it should be for you. We are extremely bearish, but we are coming off of an area of interest that turns the market around. You hear what I'm saying to you? We are coming off of, excuse me, we are coming off of an area of interest that what turns the market around. If you see all the way from here, right, the same thing happened here, right? Lower low, lower high, lower low, right? And then we have a push all the way to the upside. Now, is it not possible to start taking trades and anticipate this reversal? It is very much possible from the daily time frame and the 4 hour time frame. You see what I'm saying to you? The same thing happened here. We took opportunity. We took advantage rather of the opportunity because history has repeated itself, or rather history is repeating itself. Now we are going to take advantage again of this reversal, and we can see some sort of a double bottom right here. And if you go all the way to the daily time frame, I'll show you, an inverse head and shoulder that started this whole movement, right? So now we have we're creating structure to the upside, higher and higher lows. But until we break this last structure right here, then we are extremely bullish. Now there's no reason why you should sell. If we break here, I don't see a reason why you should sell. Even now, I don't also see a reason why you should sell, because we are bullish on the monthly time frame. That is the overall trend of the market, right? Now the daily time frame. Now this is where it gets juicy, right? This is where the information becomes simpler, right? Now, before the market reverses, it tells you. You see what I'm saying to you? Even after the market has made a very huge move, maybe a spike based on news, it comes and it corrects, and then it gives you opportunities. It always gives opportunity, right? Now, a lower low right here, a lower high, a lower low, and a higher high. I started getting my entries right from here. I got in an entry from here. Now this is what I'm trying to say, right? We have the standard practices in the market. Everybody understands break and retest, right? Everybody understands break of a trend line, right? Everybody understands this break and retest. Everyone understands it, right? But what if an opportunity comes to the market where a break and retest cannot work, where a pattern trend line cannot work? What would you do? This is the opportunity, right? Now, whenever you see a head and shoulder pattern forming up in anticipation of a reversal, you are expected to what? Break of structure, right? Normally, you are expected to buy all the way from this last high, right? But no, this is a head and shoulder that you're anticipating to happen. And rather, a reversal that is expected to happen with a reversal pattern. A reversal what pattern? A head and shoulder, an inverse head and shoulder is a reversal pattern. If you look over here right now, you can see lower low, lower low, higher high, higher low, and I got in. Now, for the first time I started trading USDJPY, anticipating this reversal, I got in from around here, right? Around here, and then you need tools to also pinpoint it. I had my Fibonacci, I got in and I bought, and I made the mistake thinking that I should start selling because I was expecting this inverse head and shoulder to happen. But a head and shoulder is not a head and shoulder until it breaks the neckline. I repeat, a head and shoulder is not a head and shoulder until it breaks the neckline. This inverse head and shoulder right here that would have turned the market all the way to the downside did not break the neckline. It did not break the structure. It kept going up, and that was my mistake. I should have kept buying off of the demand. You see what I'm saying to you? Off of this demand, I could have kept buying, and I would have made a lot of money from here all the way back to here, all the way back to here. Simple and short. You see what I'm saying to you? Now, moving forward, I did not let that deter me. As I'm saying to you, I waited for the next break of the next area of interest, which has always been 146.500. If you look at the past USDJPY analysis, you will notice that this line has been here even before the market started to move all the way to the upside. It has been there. It's something to because I plot my lines with the past. It's something I plot my areas of interest with the past. It's something to so USDJPY right now, if you might be thinking it's gone, it's quite gone, but you can wait for a retest of this level or retest of this level. It's simple like that. It's what I'm saying to you. But USJP right now, my take profit is around here. My take profit is right here. My first take profit rather is here. And when it gets there, I would remove majority of my money and then move my stop losses to break even. My final TP is here. This is the goal. This is not the goal. This is not the goal. This is not the goal. This is the goal because we are swing traders around here. We're not day traders. We are retail traders that we swing. You know what I'm saying to you? So I'm expecting the market to keep buying, to keep buying, to keep buying all the way here. You see what I'm saying? So, on USDJPY, now this is how I got in, right? This is how I got in, right? Now, if you remember, I gave the same analogy. I gave an analogy just now of how to execute a trade using just a reversal pattern. The inverse head and shoulder. Right now, I will show you again. This is the exact same thing I did again, right? I did not do anything special, nothing different, right? Now, after the retest, I waited obviously for the break of the counter trend line. I waited for the break of the counter trend line, right? Excuse me one moment. Let me place. I waited for the break of the counter trend line just like so. And then if I zoom in right here, you would notice that this is a structure point. Yeah, we broke a little bit below, but if I go to the higher time frame, it is a Fibonacci zone. You see what I'm saying to you? So focus, all right. So lower low, lower low, right? Higher high, where we broke here, and then I started getting my entries from around this low right here. And if you notice, price did not even come here and stop. Price had to come below it here and stopped, and then we start to get this push all the way to the upside. And that is how I got in. Now you will notice that I have used the same entry pattern twice. You see what I'm saying to you? I have used the same word entry pattern twice. I did not need anything else but a chart pattern. So these little things happen in the market where people do not know what to do. It's something new, and I'm showing it to you that this is also a way to execute in the market. So sometimes you may just see a V shape like this, boom, boom, and then go all the way to the upside. Sometimes you may see a double bottom or a double top. It's something the head and shoulder forming up. These are ways to enter the market. You have to be realistic. You have to learn to adapt. You have to learn to do certain things in the market when you see certain things happening. Right now, that's done. That's all for USG. But now for AUDUSD has been stubborn for the longest. I'll tell you that right now. AUDUSD has been stubborn, has been a bad boy for the longest. But with trading, the most important thing is patience. You have to wait for the right time. You have to wait for the market to come all the way to you. You do not pursue. You do not go after the market. You wait for it, right? Now, ADS has been stubborn for the longest. It is back into a ranging zone where it is back into the zone where we could expect a reversal to the upside. Now, ADUSD is still bearish. I say this again. On the monthly time frame, ADUSD is still bearish because we have not broken the last structure point, which is right here. You see what I'm saying to you? Now, but on the weekly time frame, this is what I'm saying. Even though the overall trend may be in contrast with the weekly or the daily, there are certain reasons, there are certain times in the market where we can trade in the direction that it presents us in that moment. You see what I'm saying to you? Now, the only way we can do that is when we are in a ranging, sorry, not in a range, when we are back into a range, or rather when we fulfill the range. For example, we came all the way down here, right? Now we're expecting the market to either break and continue or come back up and then keep on pushing to the upside. You see what I'm saying to you? Now this is a range, and we trade in range. We trade from this zone to this zone. Now after the market broke this zone, it tried to go down, create head and shoulder. If you can see, if you've mastered chart patterns, you will be able to see an inverse head and shoulder, but it did not work. The market refused, even though it broke the neckline. It refused and it went up. You don't cry over it. You don't do none of that. You just adapt and keep on pushing. Now for AUDUSD, we're expecting the markets to clear this zone. Excuse me. We're expecting the market to clear this zone. Retest of 0.65500. If you notice, these are around psychological numbers. These are around what psychological numbers. So we need the 4 hour to retest the 0.65500, right? Like it is about to do. You see what I'm saying to you, like it is about to do, and then we can buy all the way to our first take profit, which will be around here with impulse calculation and whatnot. But that is for another video. And then you know start looking for trades when we cross this level right here. That's what I'm saying to you. So for AUDUSD, we'll buy from 0.65 and 500. This is the place to buy from. This is where you should expect the markets to buy from right here, not from below here, right here. It's something not from above here, right here. Higher high, come and create a higher low, just like that, right? So that'll be all for EDUSD. So for card, this is GPUSD. So for GPUSD, we have an opportunity right here. For GPUSD, from the weekly, from the monthly standpoint, a top-down analysis, right? So it is simple, it is juicy. You know why? Because GPUSD is one of those pairs right now that is trending in the right direction. GBPUSD is an A plus setup because it has broken structure. Say again, it has what broken structure. Now there's every possibility that the exact same thing we keep preaching about, where price comes into the left shoulder, may happen on the monthly time frame. May happen. That's what I'm saying to you. May happen, but it is bullish, and then we cannot trade in the monthly, we cannot trade in the weekly, not daily. We have to go down to the 4 hours to the 1 hour, right? So now there's something you need to know, right? GBP rather is bullish, right? It is maintaining structure. Now, whenever price comes into this demand zone, it is a very good indication to buy. I do not buy from the top of the zones. I buy from here. It's something to you. But we have the zones where I took a loss around here, but I was expecting the markets to keep on pushing with our zones that we've marked that helps us a lot, right? But it refused. You see what I'm saying to you? It refused it, and now pricing is coming down here, and now I'm expecting to buy all the way from here. Now price may not even respect it, and it may come here. That's fine. We'll wait for a break again and retest, and then we'll continue to the upside. You see what I'm saying to you? For AD, for the daily time frame, the markets are still bullish, still uniform. It's something to for the day time frame, it's still uniform. It's coming all the way to the weekly demand. Sorry, this is the daily demand zone right here, and this is also on the weekly time frame. This is also the weekly demand zone. So you see how special this is. You see how good this looks. You see how it should respect this level, because on two high time frames, this is this price right here, 34,000 is the demand zone. So we should expect a bounce from 34,000. Now, if that doesn't happen, if that doesn't happen and it decides to plummet all the way to the downside, it is also fine. You know what I'm saying to you? All we have to do is wait for the market to shift, and we react and we adapt. But the plan is this: we plan to buy from 34,000. We plan to buy from 1.34,000. That is the plan. We plan to execute from 1.34,000, right? This is the plan, and this is how we are going to execute it. From there, nothing more, nothing less. You know what I'm saying to you? It is important to come into the week with a plan. You just wake up on Monday morning and then you sit in front of the computer without any previous analysis, without any thought process behind it. You are willing to fail. He who plans to fail, who plans to fail, you will face to plan to fail. You see what I'm saying to you? So you have to come in with a plan. You have to come in with a plan. It helps. It helps because as a trader, we do not really know what's going to happen. We plan to see something happen, then we execute based on what we plan. But most of the time, right? Most of the time, the market, will do the contrary. But when it does what we want, we make money. Why? Because we have proper risk management, not proper strategy. It sounds saying to you, we have proper risk management. Because even when we might take a loss in the process of waiting for the right opportunity, the losses are calculated. It is a calculated risk. You see what I'm saying to you? The losses are managed. The losses are learned from. You see what I'm saying to you? So that'll be all for this week. These pairs are the pairs that which we expect, proper moves in the market, proper opportunities in the market. So I urge and I pray that everyone follows their trading plan. I keep saying, follow your trading plan. Follow your trading plan to the latter. You see what I'm saying to you? When you change, your account balance will change. You see what I'm saying to you? When you change, your strategy will adapt to you. Adapt your strategy. Learn to adapt. Learn to be realistic. You see what I'm saying? And always back test every day. Come to the market expecting to learn something new. You see what I'm saying to you? You're not perfect. You cannot be perfect. So I hope everyone have a great week. Ciao, ciao.